Robert Williams is Associate Information Management Officer at ECLAC here in Port of Spain. He has spearheaded research on digital currency and on other development-related ICT topics. He has a recent paper on applications of blockchain technology to the problem of de-risking, an application that was actually referenced in one of yesterday's sessions. And he's also a software developer. Mr. Williams, your floor.
Thank you very much. We did indeed get an excellent presentation yesterday on the problem of de-risking. I'm going to follow up a bit on that. This is a paper that has recently been released, as in this month it came out. It's available on the ECLAC website. It's called Prospects for Blockchain-Based Settlement Frameworks as a Resolution to the Threat of De-Risking to Caribbean Financial Systems. So that's a mouthful. De-risking, you know, we've heard about it. Here are just some example news items that really illustrate that this is a problem right here and now in the Caribbean. Belize has been especially hard hit. You know, there's been problems in the Bahamas. Guyana hasn't lost any correspondent banking relationships, as far as I know. But the IMF, you know, recently warned them that, hey, this is something that is a problem that you need to watch out for. So just a brief recap of what correspondent banking is with this very simple diagram, which illustrates the process of moving money from Trinidad and Tobago to Jamaica. What happens is instead of moving the money directly from your bank in Trinidad to a bank in Jamaica, it instead has to go to the United States and back. So it actually, there can be two hops within the United States, one from Trinidad to the correspondent bank working with the Trinidad bank, and then one bank in the United States sends it to another bank in the United States, which is the correspondent bank for the Jamaican bank, and then finally the money goes back down to the Jamaican bank. Now there are a number of issues with this which I'll go into, but just off the top, not related to de-risking, but I would say that this is an expensive and inefficient process when you note that each of those banks in the United States is going to take their little cut off the top. This is an interesting stat I saw that the Caribbean Association of Banks has indicated that 60% of the member institutions that it interviewed have lost one or more correspondent banking relationships, and even in cases where they haven't lost the correspondent banking relationships, you know, maybe their check clearance capacity has been cut off, or they can't do wire transfers anymore. In many cases, you know, these are services that can be replaced, you know, at another bank, or, you know, you can move from one institution for another. That costs money. You know, even if you find another bank to give you service, you know, maybe that other bank is going to charge you a little bit more for the risk they're taking on. So why the de-risking? Well, a lot of it boils down to banks are getting very concerned about staying on the right side of regulators, because, you know, there have been recent lessons about what happens when banks are a little too perhaps not paying attention to what's going on in some of their smaller outposts, where money laundering has occurred. The big event for HBSC, you know, there was quite a bit of drug money being laundered through some Mexican branches of HBSC, and this ended up resulting in a very large enforcement action, $1.9 billion US. So the reasons for de-risking are, of course, concerns about compliance with anti-money laundering, counter-terrorism financing. There's also concerns about compliance with international sanctions, such as, for example, UN Security Council resolutions or sanctions against North Korea, for example. In this region, a big concern is sanctions by the United States against Cuba as part of the blockade. While that is a situation that has been, it's lightened up in recent years, but many of the laws from that era are still on the books, and banks still need to comply with them. So the cost of doing the customer due diligence has, it's not giving the banks the return on investment. If they have to do all this elevated customer due diligence, know your customer, and increasingly know your customer's customer, although largely there was quite a bit of uncertainty over, well, do we need to know our customer's customer? Do we not need to? Where does this part of the risk, whose concern is this? There has been more recent guidance that says, maybe know your customer's customer is a little too far, because that's very difficult, very expensive to enforce. Broadly, there's a reduction in overall risk appetite, especially for what they call structurally important financial institutions in the United States that under Dodd-Frank are under increased scrutiny as compared to some of the smaller banks. There's also there's been elevation of capital reserve requirements that require money that is held as in a correspondent account to have a higher percentage of capital reserve. That means money at the bank than would some other domestic savings account holding. And what that means is, if they have to hold on to more of that money, they can't lend it out. They're not earning as much of a return on it, and so it's not as profitable to them. And that's the bottom line: is lack of profitability of correspondent banking services. So we've been talking about digital financial services and a lot about blockchain. So the question is, can blockchain solve this problem? And my opinion is not yet. These are the reasons why, and perhaps Gabriel would like to argue with me about this. I think the date he put down, January 1st, 2020, maybe that's a good goal to meet, but there's a lot of things that have to happen between here, January 21st, 2020, before we can use this technology to be doing the kind of settlements that might be able to relieve the correspondent banking problem. One of the problems is, the technology just isn't mature. This morning we heard from Telly Ono, who was telling us about the banking infrastructure in the Caribbean, which is like banking infrastructure in much of the world in that it runs on software that was written in the 1980s. The reason the software from the 1980s is still being run is because it's reliable and they know what it is and there's no surprises. The same cannot be said for more recent technology, only because it's new. I'm a software developer. I know that if I release a new feature, new software, it's not. I can't guarantee it's good until it's been pounded on by lots and lots of customers. And while you can say at this point, well, the basic Bitcoin blockchain has been pounded on for quite a few years now, and it seems like it's pretty robust. There's a number of other features that have been adding to it or being built on top of it, and there just needs to be, I think, a period to let this sink in, let it be tested, let it be mature. If a banking industry is going to adopt this software, they need to have confidence that it's going to be reliable. There's also, privacy concerns, and this would be one of those, additional features that I feel needs to be added on top of existing blockchain systems. One of the things about the blockchain is that every transaction gets recorded on a blockchain. So, that's your entire financial world. Everybody, if everybody does their business on the blockchain, there's a lot of information on there, and a lot of that, even if it is pseudonymous or semi-anonymous, there's ways of tracing it down to who, you can figure out, if you look very closely at the pattern of transactions, there's ways of tracing it down to who made those transactions. And so there's a level of privacy that, the solution isn't there yet. The regulators need to be engaged. I'm happy to see that we've had some regulators at this event. We've discussed the sandbox model quite a bit. I would love to see regulators becoming engaged through a sandbox type model that would allow this type of innovation to happen, would allow pilot projects to proceed, so that we could actually get some experience figuring out how does this actually work, and what are the concerns when we're actually transferring money around the region using this technology. There's also governance models that need to be in place. I know that there's a number of banks working on different private blockchain solutions. There needs to be some kind of, if the ultimate solution ends up being a private blockchain versus an open blockchain, there needs to be some sort of governance around, well, who gets to participate in this blockchain, and what are the rules, and how do we ensure that their systems are secure. There's also a monitoring capacity. You can monitor these transactions if you look very closely, but I would say that law enforcement and banking authorities, they need to get training in this, and they need to understand how this works and what tools are available. And there's also it's a systems integration problem. Here, if we introduce a new financial exchange system, brand new set of technology on top of the old technology, you still need your current banking system to talk to this newfangled technology. There's a systems integration problem that it's going to take a lot of work to get these systems to play nicely with each other. One of the important points of this paper is that you can take away the existing wire service, take away the way we do now, and replace it with new blockchain technology. You're still going to have a lot of the same problems because it's not necessarily a technology issue. Correspondent banks still are going to have regulatory obligations, and if those regulatory obligations, suddenly, if the correspondent banks aren't in the picture anymore, those obligations still exist. So who takes upon those obligations with regard to anti-money laundering, counter-terrorism funding, customer due diligence, tax transparency, economic sanction regimes? If the new system comes into place, those obligations don't go away, and their costs don't go away. So that needs to be understood. Blockchains do present some opportunities here, however. Blockchains can be used to make monitoring easier. As we said, every transaction is recorded on the blockchain. That's a pretty powerful tool for detecting fraud and abuse, money laundering, anything like that. Also, it can cut out the middleman. Eventually, it would be nice to not have to rely on these correspondent banking relationships. And if Caribbean banks can have these relationships, among each other, they could potentially use the blockchain to bypass correspondent banks altogether. There's three basic ways that this could be implemented using blockchain technology. Either it could be using an existing blockchain, the open blockchain such as Bitcoin or Ethereum, or one of these commodity like digital currency products we see. You could either trade Bitcoins directly, or I believe the Bit solution was to use a protocol called colored coins, which works as a layer above the Bitcoin blockchain. So we could use this. There's already an existing blockchain out there. It works pretty good. We could just use that. The other option is what would be the permission model, which is you get a bunch of banks together. Each bank operates a blockchain miner. that talks with other banks on the network, and it's a consortium, and some banks are allowed to join the consortium, and that would be the permission model. So it's a bit more private than just going on the open network. There's also the central bank issued digital currencies, and in the first presentation we heard about digital fiat, which I would say is similar. So open blockchains are Bitcoin, Ethereum, Dash. I don't know if these are solutions, if this is the solution or not, but I like it because it's where the innovation comes from. They're out there. Anybody can experiment with them. You don't need to be a part of a large institution to make it happen. But it's also, the Wild West, and I can see why bankers and central bankers would be concerned about, some of the things that go on the Bitcoin blockchain or in some of these other alternative currencies. There's also the privacy problem. As I said before, transactions can be traced. They are pseudonymous, but that is not the same as being private. So permission blockchains, which is a number of banks working together to have their own blockchain. It's the governance model that still needs to be figured out. How do you figure out who's going to be allowed into this blockchain and what rules are going to operate under? These permissioned blockchains are currently being developed. We're gonna be seeing probably a lot of them in the next few years. You've got the banking industry working on it. You've also got players like Microsoft and IBM each coming out with their blockchain products. One of my concerns with this technology is that this is likely a technology that is going to be brought to the Caribbean. It's not going to come from the Caribbean. It's not going to be headquartered in the Caribbean. It'll come out of New York or the United Kingdom or Singapore, someplace where there's lots of large, powerful banks, and they're going to be the ones setting the rules. So, where's the monetary sovereignty when it comes to that? It also doesn't necessarily solve the data privacy problem. It reduces it somewhat, so it's not public, but you've still got your transaction data across a whole bunch of different banks. Finally, the central bank issued digital currency, which is direct issue of money by central banks. You can do this using a blockchain. You can do this not using a blockchain. It's just a matter of technology implementation. One idea is to have everyone in a country gets to have an account on this blockchain, which is operated by the central bank, and would use that as the primary means for conducting settlements. This would be pretty radical. Maybe this will be what we see in 10 or 15 years, but it's very different. It would be highly audible, very difficult to do fraud on this, because every transaction will go by your regulator. Your privacy issue is somewhat resolved in that it's not, you don't have anyone who can view the blockchain, or anyone at a bank can see your transactions. The only one who can see it is the central bank, which, unless you have a problem with Big Brother watching you, shouldn't be an issue. Ultimately, there is going to be this concern about how do you balance the ability to be private in your transactions versus the ability to have your transactions be auditable. And that's a political problem that needs to be figured out. In conclusion, I don't think blockchain solutions are going to be ready in time to resolve the de-risking problem. Maybe when 2020 comes around, there will be some good solutions on the table, but I suspect de-risking will be a problem that the region sees as in the past, and there will be other problems that we are facing. When that happens, it would be nice to have some other arrows in the quiver to deal with whatever shock comes along. And I think the best way to make sure we have those arrows is to let the innovators innovate. So finally, I just want to say this is a paper that's been released. The URL for where you can get the paper is right up there. My name is Bobby Williams. happy to contact with anybody.